All right, folks. Welcome back to the Short Vol Show. I keep getting in trouble for using music, so I had to use this crappy YouTube music for this one so that I don't get banned from it. So this is what you get. Thanks. Anyways, let's turn that off. Welcome back to the Short Vol Show. We are in a vol spike of some sort at this point. I think you could call it a spike. The VIX over 16 right now. Let's go to the chart and check out the scene. Okay, so here is the chart, and I'm going to get out of the way here, and we can check it out a little bit better without my big mug in the way. Okay, so there's your VXX. Let's look at the VIX here. So we've had a little spiky spike in the VIX. Now this is like a 3-year chart right now, and so you can see it's not huge in as far as like, you know, the grand scheme of things. This is not a huge spike, but look, we've got a little spiky action here. Let's go to a 180 day. When you look at 180 day, wow, it looks a little bigger, doesn't it? There's that spike. Okay, got up to almost 17 here. And this is in the wake of like Turkey, other stuff, blah, 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 blah. I'm trying to take advantage of the spike. So what I'm doing is I'm buying I bought a VXX put vertical here, and I'll show you which one I bought. VXX here. I looked at, and I wanted to go a little bit farther out, or at least a little bit out. So I went 44 days out, and I bought the September 33 put, and I sold the September 29 put. So if we do this on here, click on the offer, September 33 put, and then we'll go hold down control, click on the bid of the 29 put. Now it's showing 232 for that spread. If I look on my activity here, I can see that I spent 227 initially for that one. I was on this long delta trade with Facebook, and I had to bail on it because it was going against me. Facebook was looking strong this morning. It got down to like, but it got down to 179, and I'd had enough pain, so I just bailed on my position. I essentially bought the top in Facebook in a silly vertical trade, and not quite sure why I did that, but it didn't work out. I'm smart enough to get out, so I got out of that one. However, VXX, I did buy this put spread versus, I guess it was like 33.20 stock, so it's going my way a little bit here. I would recommend to people, if you do want to play the short vol trade, a great way to do it is to wait till a day like today when there's a spike and jump on board. Now let's look at what other things you could possibly do. We're still kind of in spiky territory, so it still wouldn't be too late if you wanted to initiate some sort of short position to jump on board. Let's take a look at UVXY here for a second. So what would be a good trade to maybe initiate in UVXY? Let's take a look at UVXY. Okay, so the range. This is 180 days. Let's go to like a 20-day range just to put things in perspective here. Is that a 20-day range? No. All right, so here is a 20-day range. So we were hanging out. We got down to 795, the all-time low. Now we're back up to 1060. Okay, we're still kind of spiked here. It got up to, 1068. Right now it's trading 1010. So you could sell a call spread in here or buy a put spread. So for example, let's look at a similar duration. What if you were to buy the 11.9 put spread in September? So you were to pay $270 for the 11 put and sell the 9 put for a buck, like a buck something. So you're paying a $1.13 for a $2 spread. So this is like, you know, you can make like about 80% on your money, something like that. You know, if this goes back to 9 in the next month and a half. Now, that looks fairly likely that could happen. Look, 9 is sort of like the middle of the range here. But remember, although we're not in a decay situation right now, we've been hanging out in contango a lot lately. Let's take a look at the term structure for a second. Now, term structure might be kind of counterintuitive for you to initiate a short position right now because we're spiking. It's not going to show us having a lot of decay. In fact, it's going to show us having no decay right now. It's going to show us not having an advantage. We're technically here in backwardation. By that I mean that the second month future is worth less than the front month future by just a teeny bit right now, by 3 cents. Interestingly, both are above the spot price again, so that's good. That's a good sign. Remember, when we look at this chart, these two have to converge, the spot price and the futures price. So if we're to draw this again, so here is our chart. Okay, I'm gonna take this out. Okay, so the opportunity to make money is essentially here. That could be seen as pressure because these two have to converge. Now, remember, just recently the spot was like way down here. So if things calm down even a little bit, spot's going to go way lower, and this curve is going to, what's going to happen is spot could go way down to where this line is possibly. Let's say this goes back to like 14. And then this chart would curve back down. So maybe if this were to go to 14, maybe the second month future might go to like 1580. And the front month future might go to like 15, something like that. So right now, as I said, it shows actually the advantage for the people long in that we're in slight backwardation. But remember, we just spiked. So since the VIX is mean reverting, if nothing happens right now, we can expect the VIX to go, the spot to go lower. So you don't really want to take the term structure in total isolation because one thing's for sure, it's not going to stay at 16. It's either going higher or it's going lower. And usually when we spike, 9 times out of 10 when we have a spike like this, it's right back down to like 13 in the next day or two. So so this term structure, it makes sense. This is what happens when we get a spike, is that it flattens out or it even goes into backwardation. We're slightly in backwardation here. A little while ago, if you had looked at this, let's erase this here for a second. If you had looked at this like an hour ago, you would have seen spot being above the futures, like, you know, something like that. Well, it wasn't, I'm sorry, let me redraw that. It wasn't above all the futures, but it was like, it was above the first two futures. So you would have seen it something like spot here, and then the two futures below it. They were still in contango. Now remember, when you have the futures way higher than spot, that's meaning that sometime in the future, it's predicting that the VIX is going to go higher. When you do get a spike like this and you get spot above the futures, that's actually predicting that, you know, that the VIX is going to go lower at some point. So flattened out curve right now, stuff moving around. We kind of have to look at stuff in real time because stuff is really is moving like right now as we speak. If we look at the VIX here, let's take a look at the VIX on like a just the day chart, and you can see the height of the spike so far was 1686, and we're off the high now. If we look at the E-minis, the spike should correspond to the low in the E-minis. Now we're off the low on E-minis, so as long as we don't take out a new low, vol should come in. If the E-minis tank and we go below 2800, then look for the VIX to fall off again. I'm sorry, if we go below 2800, look for the VIX to spike again. But right now, just from the information we have right there, kind of looks like I'm in the way. Hold on. Kind of looks like from that chart that we're on the downward move on the spike here, right? So we had it go up here and come back down. Now, I apologize that I was standing in the way of the charts there. I'm sorry about that. I had one screen that showed me not in the way, but the one that was for you had me in the way. So looks like, you know, the height of the spike may be over here. Let's take a look just at Facebook for a second, because, you know, this was a loser position for me. It was interesting how Facebook kind of rallied on the open here with E-minis just down a little bit. This thing like was rallying back to unchanged with everything else down. I mean, E-minis were down like 16, and this thing was rallying back to unchanged, showing a lot of strength. However, it just kind of puked out here, and unfortunately, I had to bail on my position, but I'm not willing to lose a ton of money on anything these days. You know, if things go against, get out. Let's take a quick look at Tesla here. Tesla, once again, a monster of a stock. We did see the recent high right after the tweet. So this, let's go to like the 20-day here. Okay, so this spike you see here on the 7th, that was the Elon Musk tweet a little bit into the trading day, saying that taking the company private at 420, and you see ever since then kind of a fade off of that high, still fading here. Market's been down a little bit, that's part of it, but if we do take a look at the E-minis, okay, so do we see this is the last 20 days, so we see we're back to where we were basically 20 days ago. A real big sell-off in the last couple. I think that the Turkey situation and the tariff situation it's kind of sinking into people. You know, when you're saying to a country, we're going to put a 50% tariff on our goods, once you get up to like 50%, that means we're not going to be selling that country anything. And that, you know, by definition can't be good for trade. Let's go to Canopy Growth Core, because real big spike in this one. You know, the MJ situation was all doom and gloom, and then we get this big spike. So, you know, coming into, I believe this is when earnings were released. Coming into earnings release, you know, sells off into earnings release, and then the huge spike. Now, somebody made money on this one. This one would have been a great one to be long a vertical or something. But we see it spikes to 40, and then fade. It's been fading all day, and you know, this could fade right back to like 28 or something, but definite fade all day. All the MJs really not too spectacular. Look, we've got a little sort of a sympathy spike, or a sympathy sort of rally back in Afria, but you know, really disappointing as an industry. For many people thought this was going to be like the industry of the moment, and it's really faded pretty badly. One equity that's done really well is this Square. Look at this. Square comes out of earnings and has continued to be strong. This is like there was an article I saw on the cover of Barron's last week about Jack Dorsey, and I think that you know, he's popular, and so the stocks rally. Now, you can't tell me that part of that people aren't buying this based on his story a little bit. And you know, like if you're following the politics right now with the Alex Jones situation, you know, Jack Dorsey decides to be the only platform that will not ban Alex Jones. Now, they did suspend him for 7 days, I think, yesterday for a tweet. But being the only platform that has not banned Alex Jones, you can't tell me that's not encouraging some conservatives to actually buy both this stock and Twitter. Let's take a look at Twitter for a second. No great shakes. You know, this was one of that first week, Facebook and Twitter earnings, with them both going a lot lower. That was the story coming into earnings, and really there's been no recovery in Twitter since then. Now remember, I was watching Twitter for a long time. It was hanging out, and it was doing nothing basically for years. Here, look, if we go back to 2016, look, it was hanging out between 14 20 for like 2 years. So it's only recently that this has started to be a mover and shaker. And when you look at the chart like that, it still looks like it's it still looks like a bullish chart, but definitely a company that has been popularized a lot in recent times by the president tweeting and by other people using tweets to disseminate important information. We just had the Elon Musk thing last week. There's tons of examples of people tweeting information. Okay, so as I talk now, the VIX, backed out below 16 now, and it looks like the futures curve is almost completely flat. I've got the VIX 1597, August futures 16, SEP futures 16. So we're almost completely flat right now, folks. Now it looks like August futures 1592, SEP futures 16. So back into contango we go as the VIX moves slightly lower. We're back in contango, and the drag to the downside is back on somewhat predictably. If this spike acts like so many others in the past, we will see the VIX go lower and us go back into contango, and UVXY and VXX go back down, give back any gains they made today, and continue their downward trek. Now remember, when we look at long-term UVXY, that's what it looks like, straight down from 9,125 to 795. People wait for the vol spike. People load up on volatility and wait for the spike. I know, like for example, my friend Sal likes to play TVIX to the long side sometimes. If you're playing TVIX or UVXY to the long side, you made money today, but if you're smart, you get out. And, once that spike happens and stuff starts to recover, you get out, because 9 times out of 10, these things come right back down. E-mini's recovering now, and it firmly looks like the spike is past its apex, and we're headed back down. There's the VIX right now, and you can see that happening. Amazon now down 26, Apple down 93 cents, Facebook 176, and Facebook, I should have known better than to just pick a stock, and I basically bought the top here. Well, if you look at Facebook here, yeah, I basically bought the top. I bought the spread around the 186 level, and it's just tanked down $10 from there basically at this point. But I mean, I did get out a couple bucks ago, but still, this could easily rally right back, but you never know. All right, so still opportunities to get in. This is a good time if you like the short vol trade and you've been following and you understand that we're very likely to go back into contango and there's going to be decay on all these products. This is a good time maybe to get in on a volatility short, because we just had a spike. Much better time than when the VIX is like 10, I would say. VIX 1572, that's pretty high for lately in the range. Let's take a look at a 180-day chart once again. Okay, so 1575, it looks like sort of average on the 180-day chart, but if you do look at this chart, you can see that we are trending lower over time. So if we bring this out to a year, then you can really see that we're trending lower over time. What a difference 180 days versus a year makes, because 180 days brings us back not quite to the spike in Feb, but if you look at this last half a year, we are like right in the middle of the range. If you look at this whole year, we look kind of high in the range. And if you look at 3 years, we look right in the middle of the range. So really, duration of where you look at the charts of the VIX really does matter. But if you were to look over the last 2 years, for example, all of 2017, the highest we got was to 1718. So we got a spike to 17 today. That would be, people would be selling this with both hands last year. And but the year before, different story. But we do see the trend down since February on this, the trend down. And if we recover and not all that much happens the rest of the week, not very surprising if this goes back to 12, 13. Really not that surprising. We were talking yesterday on the show with Dan Kaufman about the VVIX. Now VVIX, and also when we listen to Mark Longo, the short on the Options Insider Network, talks about the VVIX a lot. And I was saying how like I don't really follow the VVIX that much when it's in a normal range, but look at how it's sort of broken out of its normal range. It was hanging out between 90 and 100 for a lot of the year, but look at this breakout to 116. That definitely is significant, and we've seen this VVIX going up for a few days now. So if it turns out that this VVIX sort of led, it sort of led this whole volatility thing and this whole market sell-off, if it turns out that we do get a huge down move here, then everybody's going to say, oh, we should have followed, we should have noticed that VVIX led the move. And certainly volatility higher. Dan Kaufman was talking about how there's chaos in the currencies, and that's part of the reason for things. We know that the emerging markets have been sort of in chaos with this whole tariff situation, and that is pointed to for a lot of the volatility. As far as U.S. earnings, things haven't been that bad, and it doesn't seem as justified due to just U.S. earnings, but we've got the whole world out there, so there's more to it than just that. All right, so Dow Jones currently down 242 as we roll into the afternoon here. Are we rolling into the afternoon yet? Let's see. 11:30 right now on the East Coast. VIX 1572. The term curve pretty much flat right now. Let's pull it up real quick before I let you go here. We'll refresh it. So, things looking slightly better. I think Eli might have gotten, Eli's the guy who runs the site. I think he might have gotten these quotes to come in a little bit quicker, because this seems to be updating. It seems to be very close to real time right now. It used to be like up to 45 minutes delayed, but it seems like they're doing a better job of getting those quotes into this real quick. So anyways, very flat still here, slightly in contango though, and you can see the curve slope the way it is. If we see a return to like the 12s, this is going to be very steeply in contango, and the curve looking very much as expected on the downward slope of a spike here. So anyways, I hope that was helpful. Please leave your comments in the video. Let's take a quick look here. Wish I can watch, but gotta run. 20% not a huge spike. That's true. 20% is not a huge spike, but nonetheless, it is a spike, and there are opportunities here. I think for me, when we get the VIX to 16, that is a big thing for me, because we haven't seen it to 16 in a while. Things have been building for a while, and like I said, if 9 times out of 10 stuff comes right back, and if that happens, we're going to see an opportunity for to make some money on the short side here, and I indeed did put a spread on. Anyway, so folks, thanks for watching today. Appreciate it, and I will see you around. Looks like most people see this video after the fact, but still some stuff to think about moving forward. I like to try to make content that is relevant no matter which day you watch it. It's not just, based on that one day. Anyways, thanks for watching, folks, and I will see you next time on the Short Vol Show. Please do check out my interview with Don Kaufman, because he's a very interesting guy. It's well worth it.
But I like this.
Thanks for watching, folks.